So a quick recap of the market action this week. Certainly find global equity markets still picking up the momentum. Year-to-date gains for the likes of S&P 500 and Dow Jones are seen at 3.5% approximately. Certainly very strong trend. But having said that, we did see the bond market itself shaking the rest of the global equity markets, especially given the US 10-year yields shooting up to the 2.6% level, fueled by a lot of these jitters with respect to comments from China and also some of the bond buying actions for the Bank of Japan. But having said this, is since receded, and that itself had actually helped the US markets up on Thursday, because at this current moment we have yet to see the US CPI data from December and also some of the earnings through from banks, but we are just going to take a quick peek into the coming week. For the full suite of events, once again head on to the IG website for the IG economic calendar, where we also have a full list of the earnings report as well. But for now, I'm just going to highlight a few items. Monday we'll see the US markets close for the Martin Luther King holiday, and that itself might make for a rather quiet start to the week. But having said that, deeper into the week, we are going to find quite a bit of earnings coming through from financial stocks on the S&P 500 index. The likes of Morgan Stanley, Goldman Sachs and also Bank of America, just some of which to look out for. As things stand, the market really has been expecting the earnings growth to pick up for the financial sector as a whole. Some of this uncertainty remains with banks, but we do see that momentum fueled for the XLF ETF, the financial sector ETF for the S&P 500 index. So I think do keep that really on your radar, and I will be one investor in that as well. And looking into other parts of the market, we do have the data coming through from the US in the coming week, including industrial production and the University of Michigan consumer sentiment. Given how the labor market has outperformed the UOM sentiment, really we want to see for outperformance, and that could actually help to see the softer dollar reverse in the coming week as well. Having said that, I don't want to speak too early, given that the US government shutdown likelihood still looms ahead into Friday, so one of the risk factors to keep a close eye on. In terms of how chart performance are like, I just want to point out Euro-US dollar certainly one chart to keep on your radar, given how prices, which has shot up, really is eyeing the 4th Jan highs around 1.209 levels. I think for the market, that's really one to look out for. And also for the dollar index, eyeing the last September lows over there. So we're going to see into next week whether the data itself and coupled with the resistances could really help to see the prices itself show quite a bit of movements as well. Moving to Asia part of the market, we do have China's Q4 GDP accompanied by the industrial production, retail sales and fixed asset investment numbers on Thursday. The market is really not expecting too much of a jump for numbers over there, with industrial production, retail sales expected to be unchanged. Some of the moderation into Q4 in terms of performances could see the Q4 GDP rise slightly softer according to the market consensus of about 6.7%, and bringing the full year growth for China to 6.8%. So how the performance deviates from the consensus, maybe want to really shake the Asian market in the coming weeks. So keep a close eye of all the items that I've just mentioned.